Good morning, mortgage coaches. Thanks for joining us for another Thursday Q&A training session. For today's discussion, we're going to start with a little bit about mobile, and hopefully that'll spur some questions from you. But do remember that this entire call is a question and answer type of format. So if you have questions or if you'd like to see specific scenarios, please enter those in the questions area of your GoToMeeting toolbar. I'll be watching that on the side of my screen, and I'll make sure to answer any questions that you do have. Also, don't forget in the GoToMeeting bar there's a bunch of handouts. So if you haven't yet downloaded those, there's things like the Getting Started PDF, video checklist, sales scripts, TRID scripts, all kinds of good stuff in there. So make sure to tap on those and download those when you get the chance if you don't have them yet. And I think you'll find them incredibly valuable. All right, so first thing I wanted to cover today is hopefully you've been able to attend our Wednesday mobile conversation calls at least once. But if you have attended more than one, you've seen that they've kind of progressed and they've been kind of morphing into a more usable format. So I want to share some of the things that we've been discussing on those calls, because I know not all of you are able to attend those on Wednesdays. So we'll cover a little bit about that. I do see there's a question in the box from Dave asking he needs help on how to copy and paste the MC email. Okay, no problem. Actually, let's cover that first, Dave, because that one's a pretty quick one. So anytime you finish a client, so we're inside Edge and we've gone through the wizard, we've completed everything we need to, we've got our products down, and we get to the very end of the presentation. We need to go in and we need to hit generate link. Now this is the link that you're going to send to your client. So all you have to do is select this link, right click on it and copy it, and then you're going to paste it into an email. Now to show you what that looks like, because I'm going to show you a way that you can kind of mask what the email looks like as well. So let me open up my email client for you. All right, bring that into view real quick. There we go. So when you want to send this out to your client, I mean, there's a couple of scripts in our GoToMeeting bar that definitely will help you if you need some verbiage around how to present these to your borrowers. But I mean, pretty straightforward. There's not a lot to it. You can do something like, obviously you want to put some color around your meeting with them, what you discussed, what the goals were. But you can say something like, click the link below to see your personalized Edge presentation. And then just right click and hit paste, or do Control V and that'll paste your link in there after you've copied it from Edge. Now that's one way to do it, and it's perfectly effective. Sometimes though it might actually look better for you if you want to hide the link. So for instance, if we took this guy right here, I'll show you another variation of this. So what if I want to make it so this link isn't showing at all? All I would need to do is copy this link. And then what I'm going to do is I'm going to select the text that I want to turn into a link. So I'll select that with my mouse, right click on it, and then I'm going to go to hyperlink. When you do that, you can see it shows you the text to display, but then the address of where it's going to go to is right here. So now you can paste your link in there, hit OK, and that's ready to go. So both of these will go to the same place. If you hover over them, you can see that they show the same link behind them. But I see a lot of people using this format more because basically people sometimes don't like to see links. They'd rather just have it in the background and understand that they click on a piece of text. Maybe it's even your borrower's name. You could say something like, John Smith's Edge presentation, and then highlight that entire section and then tie that to a hyperlink. We're seeing a lot of success coming out of that method as well. So Dave, do let me know if that if that answers your question, or if there was some more detail you wanted to go into that, and we'll go ahead and start on the mobile part for now. All right, so the first thing I want to show you is I'm going to bring up my mobile device for you. And give me just a second to get that going. Let's see here, there we go. All right, so this is an Android phone, but the same concept applies when you're using an iPhone. When you actually go into the app, so let's do this and make sure everybody knows how to do this. If you've got the Mortgage Coach app loaded on your device, you should be able to tap on your icon and that'll open up the Mortgage Coach mobile app. Now this is the same thing your clients would see if they tapped on that little icon on their device as well. Now also remember, when you send one of these Edge links to your client and they open it from a mobile device, they're automatically going to be prompted to go to the App Store to install the app so they can view your presentation. But after they've installed it once, they don't need to do it again, and anytime they click the link, it'll automatically automatically just open this. But what I want to share with you today that you may not be aware of is that there's a side of this app that's specific for you as the originator, not just the client-facing version of this. So if you haven't seen this before, there's a little silhouette up in the top left corner of your app. And when you tap on that, it actually prompts you to log in. So you can log into this app using your Edge username and password, just like you do for Edge and RayWatch. And when you sign in, this will actually show you a couple of different things. Now, one of them, performance. This is at the very bottom. I'm going to cover that first because it's kind of quick. But performance shows you how many report views you have, how many lifetime clients you have, total clients. And you can look at these in terms of per month, per week. You can look at them as client or partner. Just kind of gives you a good idea of how you can measure your effectiveness on where these presentations are going. Now, more importantly, the partner and client area. Now, for the longest time, you have been only able to record a video on your presentations from your browser. So using a webcam that's built into your computer or a USB webcam that you've plugged in. However, you have the ability now to record video direct from your mobile device. So for instance, if I want to go into my client list here, this actually shows you all of your clients. And if you wanted to record a video on a presentation that you've done, maybe you're doing an update video because there's new prior to doc conditions or something like that, you can search for your client by hitting the search bar, and you can search by variations of the first name, last name, or email. Or you can simply scroll in your list until you find the client in question. Let's say maybe it's Joe Borrower. And when you tap on that, it's going to ask you, what type of report did you create for this person? Well, I created a total cost analysis, so I'm going to go ahead and tap on that. Now I have options on what I can do with it. I can view the presentation if I want, or I can add video direct from my mobile device, or I can do Edge Live. Now, Edge Live is the one that allows you to drive the presentation while your borrower is watching the report change in front of them. So pretty cool stuff. I'll show you how to do that in just a few minutes. But first, I do want to show you how to do Edge Video. So if you tap on video here, it's immediately going to open up your webcam, and you can see there I am. Pretty straightforward and easy. All you have to do is hit that record button at the bottom there. It's going to start recording. You'll see that you got a countdown timer to tell you how long your video is. The best practices are keep your video under 2 minutes. Matter of fact, Dave Ramsey says, a minute and 26 seconds. That's as much as you want to go. So it's up to you in terms of how long you need it to be. But I would say for best results, try and keep it under 2 minutes because you start losing people's attention after 2 minutes. But once you're done with your video, just hit that stop button. It's going to ask you, what do you want to do with it? And you can choose to upload the saved video. And it'll give you a status bar. And then once it's uploaded and finished, you're going to see upload succeeded. Your presentation is being uploaded and processed. It'll be available in a few minutes. Now, the reason for this little time lag here is we've got to convert it into several different formats so that no matter where your borrower clicks on your link from, whether it's from their mobile device or from the browser, it's going to be in an appropriate format that they can view that video. So we do a little transcoding on our side, but within about 2 minutes, that video is available across multiple platforms. So you can be confident that when you actually record one of these on your mobile device and then go back to it and share this with your client. So say, for instance, I finished doing my mobile video, maybe I'm at a coffee shop or something and I had to update that video. I can now go back into that Joe Borrower analysis, go into view report, and then I can share this report directly with my borrower. So let me make this a little bigger. Oops. So that's already got a video attached to it. Now, if I want to share this easily with my borrower, all I have to do is hit share report here. Now, this is on Android, it'll say share report. On an iPhone, you're actually going to tap on your name. When you tap on your name, it's going to open up another little window that has a share report link on it for you. But what it allows you to do, you hit share report. It's going to ask you, how do you want to share it? Do you want to share it via text message, via email? It's up to you in terms of how you want to do it. But this is just a quick and easy way to update a presentation and then get it over to your borrower when you're on the road, when you're nowhere near your email clients, when you're nowhere near a webcam. Just a real simple updating functionality. You should all be aware of how to do this. Now, that's one part of it. The other part was Edge Live. But before I get into that, I want to discuss how you would use this in the field. Now, part of being able to log into this mobile app is that you can pull up any of your client records at any time. So if you're meeting with new prospects, maybe you're meeting with a new realtor partner, and you're trying to show what your value proposition is, you need to be able to tell a story about the kind of service you provide to your borrowers and partners. The easiest way to do that is have a bunch of presentations that you really like, your 5 most common ones that you do for your clients and partners. Have them ready to go and be able to show those by simply tapping on the one you want and then showing with your mobile device exactly what that presentation looks like. Now, one of the easy ways to do this, you can see in my client list, I've got a little tag in front of this one. And the reason I've done that is I actually went into my client list here in Edge and I found one that I really like. So maybe an FHA versus a conventional that was specific to a borrower. And then what I did is I went to my analysis screen and I used the copy analysis function. And what this does is it creates a carbon copy analysis of that one you did for your borrower, but it doesn't have the video. It won't copy the video. But when you copy it, you can do this as a brand new client. So you don't have to redo all the legwork. You found a good report that you really like, that you had success with, and you want to be able to show this off to new prospects, new partners. Copy this into a new client record. And now it's been copied. I can make changes to this one. You notice there's no name on this. Now, so that I can make it easier to sort through these when I'm doing a presentation in the field, I put the same word in front of it for everything. So for instance, in my case, I used the word mobile. So I just named this mobile dash FHAV conventional, something like that. And then as soon as you trigger a save, that is saved. Now, the reason I do this is because when I'm actually looking at my mobile device in the field and I want to start showing these different stories that I've done for past borrowers and so forth, the easy way to do it is hit the search key. And if you've labeled those presentations with, like I did, say mobile in the first name, I can search by mobile. And when you do that and hit search, it's going to pull a list of everything that has that in the name. And you can see because I named them accordingly, I now have at my fingertips my annual mortgage review, my FHA versus conventional, a purchase power presentation, a rent versus own, and a cost of waiting. Those are the 5 most common ones that I would be showing new prospects and realtor partners. Now, you want to do the same thing for the partner side. And right now I'm on the client side, so these are all total costs. But on the partner side, if you have a kind of generic realtor presentation, an open house presentation, you want to have that available to show too. But if you're going to meet a new realtor partner, I would actually create an open house presentation that has their specific branding on it, so you can show them exactly what you do for your partners. But just wanted to give you a little tidbit on that. But let's check out Edge Live. And let's see here. I've got a specific presentation that I use just for Edge Live on these calls. So what I'm going to do is I'm going to go ahead and hit preview here. Actually, let's generate the link. Now, the reason I'm showing you this is I'm going to paste this link into my browser. This is just like if my borrower clicked on one of my links and they're on their computer. So it's going to open the presentation just like normal. They have the disclosure, they hit I understand, and then it'll show my video if I've recorded one. Now, in this case, what I want to show you is how to use Edge Live from your mobile device. So you can see if I go back now and I'm going to search that one that I had specifically created for this, and I'm going to call it Live. And then when I open to that, I'm going to choose what type of report it is. It's a total cost. And then instead of choosing video like I did last time, I'm going to choose live reporting. Now what this does is it opens up a version of the presentation that allows you to do all the highlighting. You can do the pop-outs and call-outs. So for instance, if I'm driving through this on my mobile device, you're going to see what happens in the browser is going to change depending on what I'm doing on my mobile. So just imagine the browser one here is what your client is seeing. And actually this was rent versus own. So let me go back a step. Here we go. So I've logged into my mobile app. I've gone to that specific client record and I've selected the type of presentation it was. Now I've got my borrower either on my landline, or maybe I'm even talking through my phone in the background. Maybe I'm running this from my tablet. There's lots of different ways you can do it. But as I'm having that conversation with my borrower, I'm drilling into the areas I want. So for instance, I'm first going to clear out all the highlighting. So I hit that clear all button there. Now, as I'm having this conversation with my client, I'm saying, look, Mr. Client, you're paying $1,515 for rent every month. And what we're showing you is 4 different options for home ownership. We've got an FHA 3.5% down. We've got a 3% down conventional. We've got a 5% down no MI option. And then I'm showing you an 80-10-10. Now you can see when I'm doing this, when I'm tapping on things on my mobile device, it's automatically highlighting those on the borrower's version of the presentation. Now that happens whether they're looking at it from their phone or a tablet or the browser like we're illustrating here. But there's more you can do besides just highlighting. So I'm going to clear out the highlights here. When you do something like go into the payment breakdown area, this is actually going to pop open the payment breakdown area in the browser version. So now I can go and I can highlight things like the mortgage insurance options between each of these. And when I do that, it's automatically doing that on my borrower's version of the report. Then I can drill into closing costs. So when I go into the closing costs on my device, oops, my device stopped. I'm having a problem with my Chromecast. Hang tight for just a second. There we go. Looks like I'm back in. So when I'm in my summary section, I'm going through things like the payment breakdown. I can drill into the closing costs, and I keep killing my app. All right, let's try that again. We'll go into summary. We'll go over to the investment grid. And when I get into any of these screens, it's automatically going to change for my clients. So what they're viewing is what I'm showing them. So now I can isolate things like the PITI payment on that FHA or on the 3% or the 5%. So I have control of what's going to be showing on this presentation at any given time. Now, when you clear out all the highlighting, it'll do it from both versions. And then if you back out and go into something like, say, the net monthly payments, you can tap on any of these graphs now. Let's say I want to highlight a specific graph. When I tap on that, it's automatically going to bounce the graphs on the client side as well. When I go into more info at the corner of my app here, let me make this a little bigger. When I tap on more info, you can see that it automatically pops out the more info section on my borrower side too. So now I can have that conversation about, what are the rates between each one? I got a 4.25 here, 4.375, 4.875. And I can isolate those specific rates by simply tapping on them from my mobile device. So pretty cool functionality. I would highly encourage you to practice this. If you, the easy way to do it, like I'm doing it here, is just open up that same link in a browser, like I've done here, and then go to your mobile device, log in, and go to that client record. Then choose the Edge Live functionality and just start driving around the presentation. Start tapping things, start motioning around the screen so you can see what's going on. I think you're going to find it's a very useful tool, especially when you can't be right in front of the client. So this is great for when you're just on the phone with them, you're trying to have this conversation. There's a lot of numbers on here that can be very confusing for the client. So the easiest way to ensure that they're understanding what you're talking about is simply highlight the areas as you're talking about them. Pop them out as you're talking about them. Go to the graphs and bounce something for them so they can actually see what the subject matter is at any given time. So hopefully that's helpful for you. If you need more information on this, I would highly encourage you stop in on our mobile call. If you haven't been on it yet, we cover roughly the same content each week, but we keep building on it. So this is one of the strategies that we just started building on yesterday. So we basically showed you how you can get that mobile list, but I didn't go into detail on how you would create those files with the appropriate names on them. So just the easy way to do that is, and somebody is using my login over on the training team. All right. So the easy way to do that is basically just go in and find records that you've done in the past that you really like. The ones I recommended are like an FHA versus a conventional, a cost of waiting, a rent versus own. You want to have a purchase options type of presentation where it's just different purchase prices, real cut and dry vanilla. But then, you can go further into it too. If you have a really good MI presentation where you're comparing, the different types of MI options they have, whether it's lender paid or borrower paid or maybe an 80-10-10, that's a very effective presentation to be able to show too. Maybe you're doing a lot of move-up buyer presentations. If you have one that you've done in the past, just copy it and then rename it with some kind of a word in front of it that you like to search for. I use mobile for mine, but you can certainly use it as presentation or whatever you want to call it, but just kind of keep it uniform so that when you do the search on your mobile device, it'll actually pull the list of items that you want to be able to show to your clients and partners. Dave's question real quick. He asks, is this recorded today? It is recorded, and I will be posting this recording to our coaching call archive. The easy way to get to our archive is hit the help button here in Edge. That's going to take you over to our support center. And top left link here is where you can access our coaching call archive. So you'll see that at the end of this, towards the bottom here, you'll see a link here that'll show today's call, talking about mobile features, and it'll be labeled just Q&A. But you'll see it in here right below the others. But I will have this up probably within about maybe an hour to an hour and a half after we finish our call today. So feel free to revisit this at any time. And don't forget, there's a whole library of these. So if you've got a specific item that you want to learn a little bit more about, you can always come in here and do a search. Now, you notice there's really no search functionality on the page, but we give you a little tip here. You can search for keywords by doing Control F on your keyboard. What that does is it opens up a little box up at the top here. And if I wanted to find everything concerning RateWatch, for instance, I type that in. You can see there's 11 instances on this page where RateWatch is mentioned. So now I can take a look at all the highlighted areas. There's a Thursday training call covering RateWatch Mobile. Here's another one for RateWatch Mobile. There's several in here where we actually brought Dan Rawich in. This one here, Exploring RateWatch Mobile and Desktop, this was a winter workshop. It's a 30-minute call where we dove really deep into RateWatch. So if you wanted to learn a little bit more about how the charts work, what kind of trends you should be looking for, and how to really react appropriately to different movements in the market, check this one out. It's going to give you a lot more of a deep dive. Brian's question. He says, I've created a generic report for some of my realtor partners. It did not have a video with it. Is there a way to flag it so I know which realtor opened it? There isn't, because what you would do is if you only have one presentation, it's just going to let you know that that presentation was opened. However, what I would recommend is you can of course copy that. So say for instance, this Dave Gubler one I did a while back. If I want to send this out to Dave, I can send it to Dave, right? But if this is just a generic, what I'm going to do is I'll go to the analysis. I'm going to copy this. I'm going to make this a new partner. Then I'm going to label this Sample Realtor. Now, the key to this is the friendly name. The friendly name field, I would use this to identify where I sent this to. So for instance, this is sent to Michael Smith. And then I know when I get an alert on this one, it's definitely going to be Michael that saw it. Now, as I continue forward, I can keep copying this analysis, make another copy, send it to, Jane Johnson, whoever it is, whatever realtor partner you're sending it to, but notate the friendly name here as to where you sent it. It's a great way of tracking who's viewing what. And you can copy this as many times as you want. It's going to clutter your realtor list just a bit, but as long as you're naming them the same here, Sample Realtor, what you can do is you can copy it within that record. So when I hit copy analysis here, I'm going to copy it under the current partner. And what it's going to do is now I just alter the friendly name, sent to Kevin Realtor. And I can keep doing this. I can keep copying over and over and over again. Now, the reason I copied it under the current partner is if you wanted to go in and search, you see I've only got one sample realtor here instead of the 3 that I just made copies of. I can hit my View All button, and I can just search Sample Realtor. Hit search, and now you can see the ones that I've just created. There's the one for Kevin Realtor, there's the one for Michael Smith. So I can go in and I can check the views on these ones. Matter of fact, I can just go to View History if I need, go to the Read Receipts and find out how many times this one's been looked at. So hopefully that helps there. I know there isn't a great way to isolate, especially when these links get shared, because oftentimes, these links, when you send them to your borrower, you send them to your realtor partner, you're encouraging them to share it. I mean, that's a good thing. You want them to do it. The problem is once it gets shared, you really don't know who it is that's viewing it. We can't actually track IP addresses for the person who viewed it. It would actually be a major privacy issue. So we don't do that. All we do is track that this report was viewed. So if you're intentional about how you name these and how you use the friendly name, it's a great way to understand who's actually viewing them. Brian's question, he says, does that show on the email notification I get? Let's check it out. I don't think the friendly name shows on the email notification, but let's try it out. But I know the friendly name does show in your mobile app now. We just added that not too long ago. So let me show you that. So for instance, if you go into your history list now, you can see, and I'll make this bigger for you, we actually added a little bit more to this. It used to have just your name and what type of presentation it was, but now we've actually included the name on the record. So live MI options, that's one that I've recently looked at. So it's a little bit easier to comb through your history list now and find the specific one you want. It used to be a little harder before to figure out which one was which. So we gave you another breadcrumb here that tells you which borrower was this for. Now, it doesn't necessarily solve the problem of how do I see the friendly name list, but you can actually see that inside Edge when you go to your view all. You just basically do what I did and search that particular realtor partner, and that was just sample realtor. And when you get that list, you can see the friendly name up here, and then you can always hit view history for each one to find out what kind of views you're getting. So if you get an alert, for instance, that comes across your email, comes to your phone that says sample realtor was viewed, you know that you want to go into Edge and search that sample realtor file and check which one of them had the recent view. So now I can go into view history and say, oh, there was a read receipt on this one. It was for the Michael Smith one I sent out. So not a perfect scenario, but there is a way to back into it. But great question, Brian. Good stuff. That gives me some ideas for some enhancements. All right, so on that topic actually of enhancements, if you've never logged into our support center, when you hit help up here and you get to our support center, you can actually log in here. And when you log in, you have the ability to do things like suggest new features and vote on other people's suggestions. So if you have something you'd like to see in our software, when you scroll down here, you see there's this suggest new features area. And when you tap in there, you can see that there's lots of suggestions in there. And on the right side, we'll show you, is it done? Is it planned? What stage is it at? And you'll see that the more positive votes we get on these, the more likely it is we're going to try and get this into our development program. So keep this in mind. Truck through here every now and then and just see, what are other people suggesting? Is that something that you think would be a good suggestion? If so, vote on it. And the only way you can vote is if you're logged in. So if you want to hit be the first here, you can actually log in with your social if you'd like. In this case, it's going to try and log me in with my email address. But if you don't have a login yet for the support center, just hit this, get a password. You've already got a login. You just don't know what your password is yet. So when you click on that, it'll actually send you a password via email so you can log in. And when you log in, you'll now see that you have this little thumbs up. So when you hit the button, it'll actually log a vote for you. So as you continue to go through these features and vote on them, the more votes we get, the more likely it is we're going to try and get it into development as soon as possible. So check these out when you get the chance. You have ideas, log your own ideas. You can always do suggest an idea, and it'll actually create an article post that allows you to say, what's the idea? Well, I want to see X, Y, and Z. And then give us a little detail about what you're trying to do and hit add, and it'll add that to our suggestion box. So hopefully that helps out there. All right. So I don't see any more questions in the box. So I think what we'll do is we'll just go into some basic building here, give you an idea of how you can build some of these presentations we've been looking at. Now you saw that I have 5 of them that I really like to use. The FHA versus conventional. That's the first one you learn when you go to our beginner course. Pretty straightforward. You're just comparing an FHA loan and a conventional loan. But if you've never actually put one of these together, I'm going to show you how that looks real quick. Now you'll find that as I go through this, I'm not completing every field in here. It's not required to complete every field. In fact, the more you complete, obviously, the more accurate and the more detailed your report's going to be, but it's not all required. So you can see I've left most of this blank here. Now, I'd really want to know a home phone number if this was an actual individual account. So let's change this one over, and well, let's call this one Jacob Gibbs. And then home phone number, it's our number over at the sales department here. Those are really the only things I absolutely need on this front page. However, there's some other things on here that are really going to help. Referred by, that does show in your home screen. When you're looking at your list of files, you can see your referral partner on this one. So if you were referred on this one, make sure to put this in. Partner email. When you enter a partner email, it triggers a new functionality at the very end of your presentation that allows you to send an Edge View alert to the partner too. Now, this is great for when you're cross-selling your realtor partners. If you don't have an email address in that first screen for your partner, you won't see this checkbox. Now, all this does is those same notifications you get via email that says your Edge presentation was viewed for X amount of time for Joe Borrower, that same alert is going to go to your realtor partner. Just sends an email over to them. Now, if you are going to check this box, make sure you're very intentional with your videos, meaning when you're talking to your borrowers, make sure to cross-sell the realtor partner for that video too, because when the realtor partner gets that notification that the presentation has been viewed, he or she can click on that link and see the presentation, so they can see that you're keeping them in the loop on every step of the process. Oftentimes, you start out with the realtor, you build this relationship, and then once you get to financing, the borrower is just kind of passed off to you, and there's not really a whole lot of communication with the realtor partner unless you're very intentional about copying them in on the emails. And it tends to be a little bit of noise, and some realtors like it, some realtors don't. But the easy way to do this is, as you're continuing to update your presentation, maybe you've changed the options that were available for them based on their credit score. They qualified for something else that you didn't think they would. Or maybe there's a rate change because the MBS market got a little volatile and they haven't locked yet. As you make changes to those and you're updating your videos on them, when your borrower clicks on it and actually views that, your realtor gets an alert. The realtor can tap that link too, and they can see what you're updating the borrower on. So it's just a real simple way to keep them in the loop. Highly recommend it. Now, friendly name, we talked about this a little bit in the beginning, and this is really a nickname for your presentation, but it's an open field. So you can use this for, like we were talking about earlier with Brian, is you can use this to indicate where you sent this to. Did I post this on Facebook? Where did this presentation go? So when I'm trying to track my link clicks, obviously multiple people are clicking on this and I don't have any idea who they are, but at least using the friendly name, I can identify where did I put this link. Now, when we get to the goals screen, if you're doing a purchase, there's really only one goal you need to set, and that's the purchase a new home goal. What this does is it eliminates questions about their current mortgage. The questions you'd normally ask on a refinance, those are going to get eliminated from the wizard, so you don't have to worry about them. Now, if you don't check this box, you are going to be asked about it. So it's going to assume that you do want to show a current mortgage somewhere. So when you get to the end, you're either going to have to uncheck the current mortgage, or you can always just come back here to the goals, select purchase a new home, and it'll lop that current mortgage off the presentation altogether. But notice I didn't fill anything else out here. I don't need any other goals. This is really the only one that has logic to it. There is some logic on the payoff debts. If you're doing a debt consolidation and you choose payoff debts and then indicate a dollar amount for those debts, it's automatically going to increase the loan amount on your new product to cover the payoff of that debt. So kind of a cool functionality. I don't see a lot of people using it right now, but I think that's just because nobody knows it's there. But there is some logic built into that one as well. But for today, we're going to keep this one on purchase a new home, and then we're going to continue forward. Now, at this point, we've got things like property value, purchase price. This is the only one in red because it's the only one that's required. Now, if you're doing your Edge presentations and as you're trucking along here through the wizard, you find that there's an exclamation point on one of these areas. What that means is that you've got a field in red that is empty. Now, there are cases like when you're doing a VA or USDA loan for 100% financing where you are going to have an empty field. It's going to be the down payment field. That's okay. You're going to get an exclamation point on those every time. It's not a problem, though. You can get past that. But if you're not doing 100% financing and you see an exclamation point, there's something critical missing in this presentation. Now notice that there's still areas that are related to a current mortgage. What's your mortgage payment? What was the original appraised value on that? What's the total payoff amount? We don't need to fill these in because we're doing a purchase, but the reason we leave them here is in case you want to do a move-up buyer presentation. A move-up buyer presentation assumes that they're going to sell their current property and purchase a new property using the proceeds as down payment. If you've never seen the Move Up Buyer, search that in the help menu. I think you're going to find it's a pretty cool presentation that you can certainly add to your arsenal. Now, as we continue forward, you can see that I don't have anything filled out in my affordability, but this is a great screen if you're just first talking to your client. If this is the initial, even pre-application, you're just having a consultation with a client, you're trying to figure out, are they even going to qualify to get, a loan at the property value they're looking at? Well, the easy way on this is if you put in, let's say their annual income, let's say they make 50,000, and you put in their non-mortgage debt. Let's say they got $10,000 from a auto debt, and that results in a $500 a month payment. And then you find out how much they have in their savings. This is the question is, are they going to have enough money for the down payment? Well, this is the easy way to find out. And this could be all of their assets. It's not just their savings. But let's say they've got 15,000 in the bank. And then what's the rate of growth on that account? And usually on a savings account, it's going to be pretty minimal, maybe like 0.02 or something. The reason you're asking these questions is they're pre-qual questions. And when we get over into the products area, things like the debt to income ratios will show up because you've got income, you've got non-mortgage debt, and then you have the mortgage debt that's generated by the products themselves. So you can actually tell by looking over here, what's their DTI? Well, there's our housing, there's our total. So we can actually tell if they're going to qualify for this. And 45.2, they might not. So we might actually want to reduce a little bit of that liability debt so they can get it under 45. But those are figures and factors that you would use to determine what type of loan would be best for them. And if we're just looking at DTI qualifying here, the conventional looks better. But do they have enough money in the bank to do this? Well, let's go look at the analysis screen. And I checked the reinvestment grid for this because it's the easy way to see it. You can see cash to close on either of these programs. It's more than what they have in the bank. So now this raises the question of how do we get the difference on that covered? There's closing costs and there's down payment and it needs to be covered. So are we able to get gift funds? Do we need to start looking at lower property values that would be more conducive to what their down payment would look like? So just great questions to be able to ask your client and to be able to pre-qualify them for. But again, you can leave this entirely blank and it will not mess up your presentation at all. Now, the one part in here that I would advise you to take a look at is tax bracket. If you do want to show tax benefit on your proposal, you can enter their tax bracket right here. If you don't want to show tax benefit at all, just don't enter anything right here. It'll completely eliminate tax benefit from the presentation. And the reason I say, you have an option there is because some people are very comfortable talking about tax status. Some people, they just want to stay as far away from it as possible because I'm not a tax attorney, I'm not a CPA. You really need to consult them on this. But I will tell you that what Edge does when you put in their tax bracket is it just calculates against the mortgage debt that they're paying, and it takes and calculates that tax bracket against the interest and against the property taxes and gives an estimated tax benefit over, on a monthly basis and then over a short period of time. So Dave asked, can you show it on Edge, please? Absolutely. So we do have a tax bracket in here right now. So let's go preview the presentation. Now you can see because I have it in there, I have a tax benefit line here. Now this is the month one tax benefit. It's obviously when you're looking at an amortization for any mortgage, you pay the most interest in month one. So this tax benefit is the month one tax benefit that they get on that mortgage interest. Of course, as they continue to pay through the amortization, that benefit is going to decrease over time because they're paying less interest. But with that said, we also show it in our short-term area here. So if we were to go into the more info section, this is not taking the monthly interest and multiplying it by 60. This is the real tax benefit based on the total amount of interest that they've paid over that 60-month period of time and the total amount of property tax they've paid on that period of time. So when we look at this equation, it's changed a little bit because of the tax benefit. Dave's question, how do you explain it to the buyer? So tax benefit, the real easy way to understand it is that as a homeowner, you get or as a renter, you get a standard deduction. which if you're not itemizing, it's pretty static on what you can deduct every year. As a homeowner, you get to deduct mortgage interest and you get to deduct property taxes, which means that you're going to have a greater tax benefit as long as you exceed that standard deduction. Now, I wouldn't necessarily use all those terms with the borrower. I might make it a little simpler and just say something like, well, the tax return you're getting right now, it's based on what everybody gets at your income level with your deductions. When you're a homeowner, you also get to deduct mortgage interest and you get to deduct property tax. And when you do that, your tax benefit over time is going to be significantly greater than what you're getting right now. So that, I think, would be my way of explaining it, Dave. But this is one of those cases where if I'm showing tax benefit on my presentation, I want to make sure and put some kind of a disclaimer in here. And I'll do that in my payment notes area. Now, the payment notes are located on this screen right here where you select the report. And I'll say tax benefit is an estimate. Consult your CPA or tax attorney for more details. Something like that. And then as soon as you trigger a save here by hitting the right or the left arrows, your presentation is going to update. So there we go. Now I have that little line there that disclaims me from this, and it's a real easy way to say, look, we're giving you an estimate on what your tax benefit is, but I don't know your filing status. I may know that you're filing single or you're filing married, but I don't know what else you might be deducting. It might be greater than this. Who knows? But this is an estimate on what just the tax benefit on the mortgage would look like. All right, so let's get back over into that affordability screen. Now, if we were to remove tax benefit, so I just lop it off of there and then hit the right arrow, when we go back into our presentation, we're going to see that tax benefit line disappear. And it'll happen momentarily. There it goes. Cool. So tax benefit disappeared from that area. It also disappeared from the short-term area. Now, short-term, I do want to explain this to you because this is pretty important. And actually, before I do that, Dave had another question. Is the $296 an annual amount? The $296 that you were seeing right here is just the month one benefit. That's the write-off that they're getting on the mortgage interest that they paid on the first month of the mortgage. Now, when we look at the short-term area, that was over 60 months, so that was a significantly bigger figure. Let's take a look at that one more time. I'll just refresh it. So this is just the month one benefit, but over the period of 60 months, because of the amount of interest that they're paying, you can see over a 5-year period, that's $17,000 in tax benefit. So that's pretty staggering when you're comparing it against renting and getting maybe the $6,000 standard deduction every year. You're going to exceed your standard deduction with the home ownership option. So you're going to get significantly more. And this is just the mortgage write-off. There's still going to be more that's involved depending on how they're filing. So again, make sure to disclaim yourself and you should be good to go. But the easy way, and I especially like showing tax benefit on the rent versus own, because you can actually show them what it looks like as a renter taking the standard deduction versus a homeowner taking the actual tax benefit from the mortgage. So pretty cool stuff. But I do want to explain how this short-term area is generated because this is a source of confusion for a lot of people. Let me remove that tax benefit again. There we go. Now, if we were to take a look at this and we can see that our conventional mortgage is saving $57 a month. Okay, that's just the monthly payment cash flow difference between these two options. If we were to take 57 and multiply it by 60, we are not going to get this figure. This is a significantly different figure. Instead, what we're doing with this short-term area is we're looking at just the unrecoverable costs of each loan. We're looking at the costs they're not going to get anything back on. So for instance, in this case, because I've removed tax benefit, my costs are I start with the interest in MI that they're paying over this period of time. I add in closing in points. Now, this does not include the prepaid escrows, the tax reserves, the other types of reserves that you have. So this is just mortgage costs. When we add the interest in MI plus the mortgage costs, we get a total cost for that period of time of $67,000. Now, we do that for both products. So I'll take the 61 here, add it to the closing in points, and that gives me a total of 66. Now, the difference between these two figures is where I'm getting that 1780. And it's very important that you understand this because it's really a key part to being able to explain this presentation and to be able to differentiate yourself away from the other guys in the industry who are just putting out a rate quote. They're just putting out a cash flow option. Well, your PITI payment is going to be 2,000, so over 60 months you're going to pay, 120,000. Great. What does that tell me as a borrower? Nothing. I don't know at that point how much principal I've gained as a result of those payments. I don't know how much tax benefit I'm going to get from that. I don't know how much of that I'm throwing into the wind in the form of interest. Now, this equation here, like I said, we're just taking the parts they can't get back. The interest in MI, they can't get it back. Now they can get a tax deduction on it. So what happens is when we do add the tax benefit field, this equation changes a little bit. I'll show you what that looks like. There we go. So now tax benefit is back in play. And you can see we got our month one benefit. We've also got our 60-month benefit. Now, the equation changes here because instead of just the interest in MI paid and the closing cost to develop that total cost, what we're doing is we're taking the interest in MI paid, we're subtracting the benefit that they're getting from the tax benefit. Then we're adding the closing in points, and you can see our total cost over time now is just 50,000 instead of that 60 some odd that we were looking at before, 67 actually. And that's as a result of the tax benefit. Now, the cool part about doing this is you're going to find that, if you're looking at two different rates, they're going to have different tax benefits because they're paying a different amount of interest over time. You can increase the tax benefit by a higher rate, which kind of doesn't sound like it would be a good thing, but they do get a higher tax benefit on the higher rate. So if you're looking at two different options for program types for your borrower, and the conversation is all about the rate. Well, I don't want that 4.375. I want the 4.25. Well, Mr. Borrower, let's take a look at both of these mortgages and let's really eyeball what it looks like over time. You are going to get more tax benefit out of this slightly higher rate, and it might offset the negativity that you're looking at for the interest. And if it does, it may be worth it for you to go with the higher rate on that program. Now, when you do things like principal reduction payments, when you're earmarking extra money to go into principal every month to reduce that term, you're going to find their tax benefit goes down. Why? That's going straight to principal, which means they're incrementally paying less interest over time. And in a case like that, less tax benefit than if they just paid the loan full term. Obviously, the advantages to doing a principal reduction payment are they pay the loan off a lot faster. So if we were looking at total tax benefit over the life of the loan, it doesn't matter at that point. They've got, 3 years less of loan payments. So it's certainly offset by a landslide. So there's a lot of facts and figures to consider. And it really does help you get away from that conversation about, well, what's my rate? What's my payment? Well, it's a lot more than that, Mr. Borrower. There's a reason I'm a mortgage originator, is because I like to educate my borrowers on the different types of scenarios that are available so they really realize what comes into play for each one. Maybe as a borrower, you've heard through your realtor or something like that, well, we shouldn't go with FHA because FHA carries mortgage insurance for the life of the loan. That's true. However, what they don't realize is that FHA mortgage insurance declines over time. Every year it gets recalculated based on the average 12 months outstanding balance. So when we look at our FHA mortgage insurance here, and it starts off at 186 on this, that's for the first year. The second year, it's going to go down slightly. It's going to be about 180. By the time we get to the end of this amortization, it's going to be about $20 a month, maybe less actually, if we were to take a look at it. But most people don't realize that. So this FHA loan that was stigmatized by a borrower getting incomplete information, let's say, you can now provide that education and show them, hey, this is just the month one mortgage insurance. Watch what happens to your payment stream over time. We start off with a P&I and MI payment of $14.75, but every year we're dropping incrementally. We've dropped $3 of MI there. We've dropped, another $4 there, and we keep going more and more and more. By the time we get to the end of it, we've gone from $14.75 to $12.95. It's significantly less, and that's just the MI reducing over time. If we were to look at our conventional mortgage, it doesn't do that. Conventional MI just runs at a static amount until it reaches the LTV cutoff point. In this case, 106 payments of MI at exactly the same rate. Once it drops at month 253, your payment drops as a result of the MI. So both are effective strategies, but don't discount one or the other because, and don't allow your borrower to discount one or the other because they're just looking at month one. That's the whole beauty of showing a total cost analysis, is you can really dive into the cost over time for each of these mortgages. You can eyeball what's the MI going to look like at this specific point. For instance, we take a look at the more info section again, and we just look at the interest in MI paid between these two programs. Well, FHA had that, significantly higher MI, right? But check it out. We're only paying $1,000 more in interest in MI between these two programs. So it's really not as big as it might have initially sounded. Now, if we take this out longer, and this is where it comes in as being a mortgage planner, is you want to have a plan of action for your borrower depending on certain goals that they've given you. So for instance, if my borrower told me, well, in 10 years, I want to be able to put my son through college, you can adjust this to the 10-year point. Now, the live version is going to change on its own, just like that. And you can now go into the more info section and you can see that FHA mortgage, it does cost more over time. We're looking at 118 versus 113. So we have $5,000 more expenditure on the interest in MI paid. Tax benefit, roughly the same between the two. So our conventional in this case, even though it's got a higher rate by an eighth than our FHA does, it's consistently saving money over time. These are actually kind of a wash. They're really not that far apart from each other on the costs. The difference, of course, is what does my borrower have in the bank? Can he get that $21,000 to do the conventional loan? Or are we limited to doing the FHA because of his down payment percentage? But is that such a bad thing? Like I said, these programs, because they're so close in rate, because they've got different MI characteristics, they really do end up washing out in the long term. So now you can focus on, long-term goals. You can focus on how do we make your long-term goal happen. If you want to save that extra $5,000 over the 10-year period from MI on the conventional loan, well, we need to come up with an extra $5,000 cash to close. Is it worth it to you? It becomes a wash. So just hopefully I'm triggering some light bulbs and ways to discuss the different mortgage programs that really make sense in terms of, getting that education across instead of just talking about payment. I mean, there's so much more to a mortgage than payment. And certainly we don't need to tell our borrowers every little bit about how a mortgage works. There's going to be some eggheads like me that if I go and get a mortgage, I'm going to be picking my originator's brain about every part of this mortgage. And you're going to have those guys too. You're going to have the engineers. You're going to have the nerdy guys that really want to see the numbers and love to see the amortizations. But you're also going to see the people that have never even understood that the mortgage interest is on a sliding scale for an amortization. What? It's not like my car payment. It's not simple interest where half my payment goes to principal and half goes to interest. Well, no, it's substantially different. Let me show you how this works. So now you can really change that conversation and kind of guide them into making the appropriate decision for the long term, not just the short term. All right, so that is pretty much the walkthrough on FHA versus conventional. I do want to point out a couple of things. If you've never done an FHA mortgage, the way I was able to get that declining MI is, one, when you do an FHA, you got to select the appropriate premium. So this is normally labeled none. Make sure to select FHA on it. Then when you get to your closing cost screen, make sure to do your upfront MIP. And you can do that as a percentage. That is the preferred method of doing it. Edge will automatically strip off the cents and add them to the cash to close. So it's only going to finance the whole dollar amounts, just like your origination system does. A majority of the time, you are going to finance that mortgage insurance premium into the loan. So you can check the box and it'll increase the loan to cover that. When you're doing some of the lower LTV FHA loans, though, and that's debatable as to whether you would actually want to do an 85% FHA loan. I think I'd probably be better off in a conventional at that point. But some of the lower LTV ones, you may be asking them to bring that in, or you may be so say it's a streamlined refi, you may not be financing that into the mortgage. You may ask them to bring it in so they can stay under a certain LTV and avoid an MI hit for going above, say, 95 or something like that. But there, one out of 100 that you're not going to finance this in. So majority of the time you will. And then finally, when we get to the mortgage insurance, there's two different factors that determine how a mortgage works, how mortgage insurance works in Edge. Now, one, and I'll just kind of erase all this so you can see what everything looks like. When we first get to the screen, it's zeroed out. Now, for FHA mortgage insurance, it's static by the guidelines. You don't have to call up an MI company to find out what this is going to be. The guidelines are really straightforward. When you're in a certain LTV, it's going to be a certain percentage. Now, for the 96.5 LTV on this one, I know it's 0.85. That is just a static guideline. And when I tab off this field, because I've tagged this as an FHA loan, Edge knows that it needs to check this box for me. Calc MI on the balance. That's what shows that reducing MI over time. You don't need to fill out these other factors anymore. These really, if the minimum number of months on this loan is full term. So I could put 360 in here. It would act exactly the same as if I left a 0 in there. If this was a conventional loan, so let's get to our conventional, you notice that I don't have an upfront premium here, which means no upfront premium area here. It automatically removes that. And when I get to my monthly MI, I've got my factor, and this is the one you do need to contact your MI company to find out. Generally, you can make a pretty educated guess on these. Unless you're using risk-based MI, they're kind of going to fall in the same lines under LTV factors pretty consistently. But once you enter the factor here, you're not going to check the Calc MI on balance, and Edge won't do it either because it knows this is a conventional. But it will put in that 78% cutoff for you because that's when MI is actually going to drop on this loan. Now, one more thing before we wrap for the day is how do I see an amortization schedule in Edge? I've created these two products. I want to make sure they look the way I think they do. I want to see that declining MI over time. Maybe I've done an adjustable rate mortgage and I want to see what that looks like over time as it hits the adjustment points, as it continues to adjust on the periodic scales. How do I go and take a look at that? Now, the way you do it is you go to the first screen of the presentation area in your wizard. Instead of selecting total cost analysis, select amortization schedule. Then hit your right arrow, and then you can choose which of the loans on your presentation you want to see an amortization for. So if I want to see my FHA, I'm just going to leave that tabbed, and then I'll hit preview. Now this is just the standard amortization like you expect to see. And it shows the payment. It shows it decreasing over time. And you can see where it stops. So we've got that 1475, and there we go. Month 13, it goes down to 1472. And that is a result of the MI changing. See, we've got 186 all the way down. Then at month 13, 183. Now, if we were to go all the way down the schedule, we will see at the very end, MI is only $5.74 a month. So that's assuming they kept this loan full term, but that's a different discussion. That's a discussion where you need to make sure you've got their goals in mind for long-term mortgage planning. The FHA mortgage, it may be a great long-term suggestion for them because we have such low rates right now. But you guys heard the Fed announcement a few weeks back. Rates are going to be going up. And when they do, it's going to be more important to really plan a strategy for what happens when they do. Where are we going to be at in 10 years? Are we going to be able to get you financed into a different type of loan program? Would conventional be the better option at that point? But this is where, when you're taking care of your borrowers, every year you want to do an annual mortgage review for them. Now, if you've never seen what the annual mortgage review is, I got 2 minutes, so I will show you what that looks like. An annual mortgage review is you're combing through your past pipeline, your closed loans. You're looking in your LOS and saying, okay, let's open the closed folder. Let's see what's in there. And we go back and we take a look at everybody we closed, maybe 13 months ago, because I want to have it ahead of time ready for them. So I go back and I take a look at all the closed loans for, let's say December of 2014. And I'm going to go into those and I'm going to prepare a presentation for each one of those. When I do it, what I'm going to do is I'm going to choose the lower my interest rate option. And I'm going to enter what I can about their current mortgage. That's the one I closed for them. So I've got that. It's in the origination system. I've still got a 1003 on that one. So I can literally translate that data right here. I can put in their first payment date, their original loan amount. Let's say it was 325. Edge will automatically calculate. If you've got the rate, the term, original loan amount, and first payment date, it'll calculate what their current balance is. So you don't have to guess at this. If you do know their current balance, because maybe they've made extra payments, certainly feel free to overwrite this. It'll actually adjust the freedom point accordingly. But you put in the basic data about this loan. You can see what your P&I payment is. Put in your taxes and insurance. You'll have this on your closing form, so you can actually put in direct dollar amounts so it makes sense. Put in mortgage insurance if there was mortgage insurance on it. And now we've built their current mortgage. And then all we're going to do is when we get to our new products, we're going to use this refi switch. And when I flip the refi switch, it automatically updates the base loan amount to be exactly the same thing as the current balance back in the assumptions. So now I'm doing a straight rate and term refi here where my base loan amount equals what my payoff is. So when we get into our closing costs, if they've got room on their LTV, and we can take a look at that right here, you can see our LTV is at 90%. So they really don't have room on here to finance this in. They could, maybe between the 90 and 95 mark. It's really not going to make a difference. So we could ask them to finance it in as long as it doesn't exceed the 95, because you know they're going to get a rate hit there. If that's the case, just go into the closing cost details and you can see what I've done here. I just added all fees to the loan, so that actually finances all of them in. I hit apply to loan. That's increased my amount financed by the amount of those closing costs. If I want to stay under 90, I can actually choose to have them bring all the closing costs at close. So it'll be cash at close. And now my LTV is under 90 for that product. So if there's a significant enough hit by exceeding 90 LTV, you might want to recommend this option to your borrower. But what I've done here on this annual mortgage review is I'm just comparing what does your current mortgage look like and what are your options for a new mortgage. And I've done a 30-year fixed and a 15-year fixed. And all I'm going to do is go to the end of this presentation. Oops, let's choose the total cost. I'm going to probably give them a little bit more color, thanking them for doing business with me, letting them know I'm looking out for you every year. This is just what's available out there for you. And then go to the end of it and record a video. Now, there's going to be a good chunk of these that you do where it does not make sense to refinance because you got them on a great rate last year, and because of the closing costs that are involved with doing a refinance, the rate difference isn't enough to offset it. It doesn't make sense for them to do a refi. That's okay. You still want to send that out because you're still letting your client know, I'm watching out for you. Every year, I'm taking a look at your mortgage, and I'm going to let you know whether it's time for a refinance or not, whether it makes sense to do one, whether the cost of doing that refi is offset by the rate change that I can get you, or by dropping out of MI, for instance. If they're kind of close to dropping out and they can put in a little bit of cash to come under 80, then it makes sense to do that refi. But there's going to be a lot of cases where it doesn't, but that's still a very valuable presentation to send to your client. So I would put all that information in the video. Mr. Client, thanks for allowing me to do your mortgage last year. As I told you during our closing, I'm going to be doing this for you every year, where I'm going to present this comparison of what your current mortgage looks like versus what some new options are for refinances. In this case, I've taken a look at what rates are this year, and the rates aren't low enough to offset the cost to actually close on a new refi. So I don't recommend refinancing right now, but I wanted to give you an image, a global look at how these mortgages look right now, so you can understand I'm taking care of you. I'm going to do this again for you next year. If you have any questions, call me up if you're interested in maybe another purchase or something like that. And certainly ask for the referral in your video. Don't forget to ask for the referral. It's very important. It's so easy and it's so functional. All right, with that said, I know I've been talking you guys' ear off. Thanks for sticking around. I know we went a little over time today. Feel free to join us. We do a lot of trainings. Monday's Edge Beginner course. Tuesday is Dave Savage on the sales training kind of interview. Wednesday is our mobile call. Thursday is, of course, the call you're on right now for the Q&A. Friday, we don't have a call yet, but we're considering building a new one. So if you got ideas on what you'd like to see for a specific type of training, shoot us a note over at support or put it in the suggest new features area. We'll see if we can get that going for you. But then, of course, don't forget about the Mortgage Coach University. Those run every day of the week for the first 3 weeks of every month. The 101 courses are at 8 a.m. Pacific, and they cover all the basic strategies for 3 weeks. So 15 different calls of, how to create the cost of waiting, how to do the rent versus own, how to read your rate watch charts, all the items. As a matter of fact, if you wanted to see what that curriculum looks like, just go to the Support Center, type in University, and there's our Mortgage Coach University, and you can see exactly what we cover. We're on the third week right now. So for today's classes, Brian covered this morning seller buy downs, how to do permanent and temporary buy downs. And then at 11 a.m. Pacific is the 102 course, where he's going to be showing you how to create a points versus no points presentation. Then tomorrow we've got using the open house presentation as a prospecting tool. And then in the afternoon, using Edge Live to deliver your advice. And then next month, we're going to start all over again, and you can see what our curriculum starts with. It's the basics, setting up your settings, images, how to use the Edge widget, and then the afternoon course, creating your first product and fee templates. So stop in on these anytime. You only have to register once for the 101s for the month and once for the 102s, and you get reminders each day. Stop in on any one you'd like, or all of them if you can make it. But uh, training's always there for you, and our team's always behind support at mortgagecoach.com. So don't hesitate to reach out to us if we can be of help. But with that said, I did record this. I'll be posting this to the Coaching Call archive in about an hour here. But have a wonderful day. Thanks for all the great questions. Dave and Brian, you guys were awesome today. Thank you very much. And I know you delivered, I know you created value for a lot of the other people on this call that weren't asking, but definitely beneficial. So thank you very much, guys. Take care and have a wonderful day. Bye-bye.